Welcome to another episode of Limitless Trading. We wanted to bring you where we're at and some of the ideas that we were talking about. We had said that that inverse head and shoulders was playing out, not 100%, but very, very close. We're breaking out. I said if we go above 650, we're going to get everybody out. There's a little trend line here that started developing. Um, if we go above 650, it was 614, 6126, 6173. And remember, there's still guys here from Q1 from the election that are still stuck out there. You know how market makers are, they're greedy. So I said if this trend line breaks out or 59.83 held, we're coming up here to at least 6200 even, 6250 to get everybody out. And I suspect with a little bit of greed, these guys are going to go 6500. Actually, my target is up here at 71 and change, and we'll talk about that in another video of why our target is that high. In terms of runners, if you took the long, when you get to 650, you're just moving your stop loss. When this line came in, this trend line, actually, we could put a little trend line here that started developing at the 6073 range. That's now another support line. You're just running stop losses. You don't have to chase. Now, if you miss it, you say, well, I let go of 650. Well, you're green, right? You took your green. Now you're waiting. Do we reject this trend line that developed, this upward trend line? From the support that held, right? So this was resistance April 2nd. It turned into a little bit of support of May 12th. Now we have to see, do we break out of this trend line and again continue, or do we reject around here on the jobs report coming up, GDP and PCE, which may come in hot, give us a back test. Again, we want to back test this, but we're in an uptrend. We had a downtrend, which was beautiful short for a couple of days. I said, guys, get out of it. I do have longs for July CPI because I believe that we're going to break down out of this area, come here and do some testing, and then break out and blow out of all this area. But again, no assumption. We've been long since here. We took longs here. We took longs here. I said again, at 59.83, go long. So you're long. If 61.73 rejects, shorting it back down to 61.26. Back down again to 60.73, 60.50, 59.83 can retest. Remember, we haven't retested any of this area, the 5,600 area, and I believe that's going to be the shocker for July. July last year, we had a 9% correction. So typically, July is the most bullish month of the year. Last year, it ended up being the low of the year, right? April tends to be the most bullish month. Obviously, it was bullish on the back end. So I believe we're going to come into July low on the bad CPI, probably front run the FOMC, right? Because Powell said that CPI is going to be hot. The market now knows it, and that's why we're up here. The market is anticipating that. The market is anticipating poor labor and a rate cut. But that rate cut is going to be for bad reasons, right? We're cutting rates because of a softening economy. Would that mean that we're going to go up to the nosebleeds by August? So I suspect we're going to reject here, ping pong, ping pong, ping pong, maybe break down, but we're going to be way up here by August, and then we collapse. Then we give it all back. Now, if the jobs report is too strong this week, right, labor market, whatever, we can come back. But your key is trend line holds, you're going long. Support fails, like all this cluster keeps rejecting, take your short. We have a pivot coming in on Wednesday. Could be a high into Thursday. Also, the second quarter ends on Monday. Historically speaking, June 30th is bearish. Then the market will kind of glide up again into July. Again, there has not been a bearish summer in 21 years. Can this be the first one? Absolutely. But the summer does not end until Labor Day, which is this year, I believe, September 1st, which is a Monday. So one level at a time. If you have any questions, concerns, you want to know how we do this, please comment below, and we'd love to help guide you on your financial future.